And silver, I think silver is getting ready to explode. We did get as high as 39 and a half, I think, while I was on vacation. It's going to make a beeline for 50. And there probably will be rather, a little resistance around 50 because that's a massive double top going back to 1980 and 2011. But once we take that out, I think it's going to explode higher. And I think we'll be headed towards $100 an ounce in silver. Of course, gold's going to be 4,000 by then, but that still means you get a better bang for your buck in silver. So just as they are today, the Secretary of the Treasury and the Federal Reserve were completely wrong. And I'm right, but I'm carrying on my father's tradition about being right. Quiet week for the precious metals. Gold itself was actually down about 0.5%. I think it settled at around 3,336. Silver went the other direction. It actually rose a tad, up about 1/3%. And we closed the week above $38 an ounce. But from a technical perspective, I think the markets are set up for another explosive rally. And what really makes me optimistic now is the action that I am witnessing in the mining stocks. Because one of the problems with this rally for many, many years has been the failure of the mining stocks to confirm the continuous breakouts to new highs in gold and silver. And a lot of people who might have got into the market were discouraged by the lack of confirmation from the gold stocks because people think that gold stock investors, are sophisticated and forward-looking. Because when you're buying stock in a gold company, you're buying into an earnings stream. And so what's more important than the price of gold today is the price of gold tomorrow or, years from tomorrow. Because investors are looking into the future and they're discounting all that income into the present. And the problem was, as investors, particularly on Wall Street, watched the gold market rise, they really didn't understand why it was going up. And they just expected that, it's going to go down, that this is just a short-term thing. They found all sorts of reasons to attribute as to why the price of gold was going up. And so they just assumed that it was going to go down. And so they didn't want to buy gold stocks because if you think the price of gold is going to go down in the future, that means the mining company profits are going to go down, especially with costs going up. It gets more expensive to mine gold every year. So if the price of gold doesn't go up, it's hard to maintain your earnings. And if the price of gold goes down in the face of rising costs, that's a double whammy. And so the investors were staying away from gold stocks because they were very suspicious of the rally. Well, looking at the action this week, and even in recent weeks, I'm starting to see investors gaining some confidence in this bull market because I'm seeing days now where the price of gold is down quite a bit and these gold stocks are up. They used to get killed. I mean, every time gold went down, they got destroyed. And then gold would make a new high, but the stocks wouldn't make a new high because they got beat up so much on a small dip. But now, instead of being dragged up by the metal, gold stocks are starting to lead with both the GDX and the GDXJ making 52-week highs on the week. In fact, the GDXJ, which made a new high after the GDX, made a new high this week and made a new high today on Friday. And both of those indexes are now up 65% on the year. That is a big move. Gold itself is only up about 25%. So finally, after years of lagging, they're now starting to outperform. And this is a bullish sign because now we've got confidence in this bull market. Now, some people might say, isn't that a contrarian indicator now that people are buying these stocks? Not really, because this is sophisticated money. The public is not involved. And it's not like this is a mania, a blowout stage where you go to the supermarket and the cashiers are talking about the penny gold stock that they just bought. the public is not involved in this market. This is more sophisticated money finally moving in. And the way I noticed that is a lot of these gold stocks, when they report their earnings, recently, every time they reported earnings, even if they beat numbers, they killed the stocks. And if they missed numbers, they destroyed the stocks. Well, a lot of companies have come out with earnings over the last couple of weeks. Some of them beat, some of them have missed, but even the misses were great earnings because, compared to what they earned the prior year. But what I've noticed is every time these stocks get sold off, almost reflexively on these earnings, they bounce right back. It might not be the same day, maybe the next day, next 2 days, but they recover everything and move higher. So you have big money now that is buying the dips in these stocks. And this is just the beginning of a huge wave. In fact, that's why, if you remember back in April, I kind of angered some of my reps, my precious metal specialists over at Schiff Gold, because I put out a special report from Europe Pacific Asset Management, and it was called The Best Way to Buy Gold. And I was saying, hey, don't buy gold right now. Buy gold stocks because they were so cheap, and they're still cheap. Not as cheap as they were then, but still very cheap. I wasn't telling people not to buy gold. I was telling people to buy gold in the ground before it's dug up, because when you invest in a gold mining stock, you're buying the gold that's just still in the ground. When you go to Schiff Gold, you're buying the gold that's already been mined and fabricated and made into a nice, pretty coin or a bar, right? And you're buying that. And what I was saying with that report is, you know what? Gold's over $3,000 an ounce, and look how cheap these mining stocks are. You got to buy these mining stocks right now. This is not the time to buy gold when these stocks are so cheap. And since I put out that report, the price of gold is only up by about 1%, but these gold stocks are up by more than 20%. So I think this is, a marathon. I think we got a long way to go, but it's a very, very positive sign for the metals. And silver, too. I mean, silver has been demonstrating some relative strength. So I'm not telling people now, hey, don't buy any gold and silver. Everybody should still own some physical gold and silver. But I also think that more aggressive investors should buy these gold mining stocks, because I think they're going to outperform now for many, many years. So if you really want to leverage up your portfolio, don't just own physical gold and silver. Have some of the miners. We manage a fund at Europe Pacific Asset Management, the Europe Pacific Gold Fund. EPGIX is the symbol, the no-load symbol. So you could buy that at any discount brokerage firm, or you can go to Europac.com, talk to the representatives over there. You can buy directly on our website. And silver, I think silver is getting ready to explode. We did get as high as 39.5, I think, while I was on vacation. So we've got a little bit of a psychological barrier up there, close to 40. But I think once we really clear $40 an ounce on silver, it's going to make a beeline for 50. And there probably will be, rather, a little resistance around 50, because that's a massive double top going back to 1980 and 2011. But once we take that out, I think it's going to explode higher. And I think we'll be headed towards $100 an ounce in silver. Of course, gold's going to be 4,000 by then, but that still means you get a better bang for your buck in silver. So I think the entry point is perfect. I think if, you don't have enough gold or silver, or who knows what's going to happen on Sunday night, anything could blow up. I think these metals are like, the proverbial a coiled spring, and they could really go. But if you want to get into the mining stocks, if you want to get into my gold fund, yeah, you got to wait till Monday to do that. You can't buy that over the weekend, but you could buy the physical through Schiff Gold 24/7. And, by the way, today I don't like to say anniversary. It's been 54 years since Nixon took us off the gold standard. It was August 15th, 1971. The Day the Dollar Died is the title. You can also search it. It's on my YouTube channel, so you can search it on YouTube, The Day the Dollar Died. But it's interesting that you can see the national debt clock on that video. And just since then, in the 4 years exactly since I made that video, the national debt is up by $9 trillion. And the price of gold is up by 85% in those 4 years. Now, of course, if you want to go back to 1971, I mean, the national debt was tiny. I mean, it's like, it wasn't even it didn't even get to $1 trillion until 1980. So I don't remember what it was back then. Maybe it was a couple hundred billion, right? And now it's